Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris. We'll be focusing on entry and exit tactics when looking at the Forex commodities and stock indices markets. First of all though, be aware that this video and, or actually first of all live webinar, but then video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact the appropriate entity for more details and to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of risk. You are aware of the risk involved when trading. All right, I know that was a lot of talking about risk, but it's important. Now we can move on. And first of all, a quick note. AdmiralMarkets.com, make it your hub. A lot of good info here. Here you can see how to minimize volatility risk. You can read more information on that page. There is a educational course here, Forex 101. You can find out how to trade the DAX. You can find out more information about MetaTrader 4 Supreme Edition, 60 extra additional features that make trading life easier, and we'll be showing a few of them in this live webinar. So just to give you an idea about all the kind of options available at admiralmarkets.com. But you can also go to analytics, for instance, check out our blog, our analysis, etc. A lot of good things there at this moment. So with that said, let me head over to the charts. I know we're all curious what the charts are saying. So I have a bit different template now than usual. Basically, what I typically use is Admiral Markets Pivot Point, Admiral Markets Keltner Band, one moving average, and the Awesome Oscillator. So I wanted to show you a different perspective this time, not using the Pivot Point and Keltner, which you can find as part of the MetaTrader 4 Supreme Edition. By the way, it's a part of the indicator package. I want to now focus more on trend trading in general, and what I like with trends is the moving average or moving averages. So I use basically 4, as you can see, and well, one is the 144 EMA close. It's for the long term. It indicates basically obviously the long term direction. If price is above it, we're in uptrend. If it's below, downtrend, standard stuff. Then I have the 21 EMA, high and low. That creates a band. And you can see basically that when price retraces back to the area rough zone of the 21 EMA, then there's a chance that price might bounce and continue with the trend, or if it doesn't and it breaks below it, then there could be a larger retracement going on. The reason why I use a zone, why would I not only use 121 EMA like I do with the 144, is because the moving average is a zone. It's more of an area where price could respect and bounce rather than a precise level. If we're of course using a psychological round level like parity or 1.1 or 120, obviously this is a precise level. Even then, actually, the market might stop a few pips below or above it. So even a precise level is still a zone in a way. But definitely moving averages are even more so like that. Price typically, could dip right just below it, or could stop right at it, or could stop even just above it, right, or below it. So that's why I like to use a zone, because if I only use one EMA for the 21, it's more difficult to pinpoint kind of where that zone is. So by using the high and the low, I can easily see where that zone kind of travels, where it's situated at this moment, and it makes my mind more flexible than only using one MA. Then I use a fast moving average here to indicate momentum. So yeah, it's a triple moving average for the trend, long term, medium, and short term. Very simple. So let's take a look right now at this euro dollar. At this moment, from my perspective, the euro dollar is either going to be reversing, or this is still a major correction within an uptrend. And it is currently not an uptrend. If anything, it's in a correction at this moment because price is above the 144 EMA, but it is also below the 21 EMA. So it's kind of being squeezed and it's being trapped. So what needs to happen is price needs to break above this 21 EMA and need to see kind of an attempt to push above it. I would not trade that attempt. I would probably wait for price to get above it. I would go to a lower time frame and look for some kind of retracement here and a continuation. So I would probably be trading with a break pullback continuation, a BPC concept here. The reason is because I would like to see a good breakout candle as well above the 21 EMA. Otherwise, it might be a failed breakout, I forgot the word for the moment. Well, yeah, a failed breakout, you know what I mean, and a rejection. That's the word I was looking for. And price might actually start the reversal like this if it's a strong rejection. So that's why I'm a bit cautious with not immediately taking a pending order as price breaks above this resistance zone, because the next resistance level is very close and could indeed ultimately start a bigger correction or reversal. So, but if price does push up like this and then with a good candle and then makes a bull flag on the hourly chart, I would be interested in the breakout like this. And what happens then, the moving averages will start to point bullish like this. Price might even retrace back to the moving average and use those moving averages to bounce back up and continue with that uptrend. That's something that could happen if price holds its territory above this 21 EMA. For the moment, I'm not interested in trading the 21 EMA myself, this breakout or in here. If, however, price were to break below these bottoms, that might change things. In that case, price might make a breakout like this to the downside. It is counter trend, but considering the fact that price has broken below the EMAs, the 21 EMAs already once here, this would be the second breakout, in fact. 1, 2, and with the second breakout in a correction, there's, I think, more probability. The setup is stronger, more likely to succeed as a reversal than trading the first one. The first one is always a bit more difficult. So if price were to manage to break below with a good candle below 111.80, I think there's a good chance for price to get down to 111 at first and maybe even lower depending on how much momentum this sees. On an hourly chart, we can see that we're already aligned in the downtrend actually, and therefore, hence, if price breaks below this bottom with a good hourly candle like this, these moving averages will turn, and you can see that those 20 EMAs would be above price, and the 21 EMA would be below the 144. So everything is aligned. Price, moving averages, everything is aligned like that. That would be a downtrend on the hourly chart. So that is basically what I'm looking for. 4-hour candle upside, 1 hour candle downside for either a break to the up or downside. Now, generally speaking, not the best environment, I think, on the euro dollar, but that's that's our options, I think, for this pair. Daily chart, basically at this moment, I think that obviously strong resistance, nothing much to say, nothing new really on this particular currency pair. I think from a time perspective, this is the 6th day already, by the way, yesterday in a doji. So that increases the chance of a reversal back to the downside, by the way, rather than a continuation up, because it's taking quite a long time for price to make that upside move. And because it's taking that long, I would say that a reversal is becoming slowly but surely more likely. At the start, when price was making this candle, of course, the chance of a continuation was slightly higher, although there was strong resistance, so we still had to see. At this moment, price has gone sideways. It has not been able to break above resistance for that many days already. So from that perspective, I think that although you never know, the breakout to the upside could always happen, the chances of that have substantially decreased in my view, and I don't think it's that likely anymore. So I do think that a reversal is more likely to the downside. Hence, therefore, this upside is risky to trade because it could be just a correction, a deeper correction before a larger downtrend starts. Let's take a look at the dollar yen. Dollar yen has a bearish alignment at this moment on the 4-hour chart, and but the thing is that the daily chart is at pretty strong support levels. You can see this is a Murray Math indicator indicating basically key support and resistance levels. And if you're not, aware of the Murray Math levels, basically it is at pretty deep support. So on the daily chart, so this could be a bouncing spot. Also, if we add a fib from here to here, you can see the price has respected the 78.6 fib. So from a daily chart, I think this is a bounce area at this moment. We talked about that last week, although I said that because it slightly broke below the 78.6 fib, I thought that it could reach the 88.6 fib. That it didn't do. So that could sometimes be tricky when price kind of nudges through a bit of a level, but then ultimately still bounces. So this is an example of that. Ultimately, so far it has not made it to that deeper fib. So considering the fact that it hasn't done that for a while, I think that that there is a chance that this could be actually the start of a bounce to the upside, and hence that this could be a correction, in fact, and that this could be a new upside again, based on that daily chart. Why? Because price is at deep support, 78, deep fib level, so that's why this could be the start of a reversal, despite the downtrend on the 4-hour chart. But if price does break through support, then there is that chance that price could go down to the 88.6 fib. All right? So we'll have to see which side breaks out. From a daily perspective, I think that both breakouts are possible. So I'm keeping an eye on this level right here. Basically, probably this level, 110.25, and this level right here. And it will be interesting to see which 4-hour candle can break through these levels. That might say something about the upward downside. This upside is still fragile because of the fact that it's still in a downtrend, but there is good reasons on the daily chart to expect a continuation higher. So I'm keeping an eye on these levels. I would then zoom into the hourly chart and see if I can, find some potential retracement and continuation trade. Let me see if I can find an example. For instance, here, good momentum, right? Some kind of flag here, and looking for the continuation here and here. Some good setups for continuation lower. So something like that would be neat as well once these levels break. All right. Hi, Ilya. Hi, Raj. Good to see you. Indeed, it's me, Chris. Indeed, Nana will be tomorrow, and yesterday with his live sessions. Yesterday was a recap session. Tomorrow, live trading session, and I think tomorrow afternoon. The pound, I myself took a trade. You can actually see the lines indicating the short from here to here. I exited a bit too early, but that was 50 pips. I was shorting the break of this. So we were in a downtrend correction, and I took this break below the trend line and moving averages. And I exited it a bit earlier, partly because I thought that there could be a bigger correction like this first before continuing with the stronger downtrend. That has indeed happened. Price was unable to break this support. So for the moment, on the 4-hour chart, definitely in the downtrend, but price is making a retracement. And you can see that with the momentum moving average like this. This is upward already. So basically at this moment, price would need to, I would need to see a turn on price like this, but also break below that short-term moving average first before I would trade it. So we'll have to see. At this moment, I'm not going to trade any short unless I see a clear response and break below this moving average. So that might take a while. Let's see. Well, even on the hourly chart, no, I correct myself. I wouldn't necessarily need that on the 4-hour chart. But what I would need is the hourly chart to make a turn. I'm not sure where it's going to turn. At this moment, it might even turn right here. It doesn't have to necessarily close the gap, I think, personally. But it could, because price is trying to move away from a range here. So when it tries to break away from the range, it does like to hook back to it before making a substantial move. So I think there's a decent chance, but I wouldn't want to trade to it because I think that it's personally, unless you were trying to, maybe if you took a low, not a low risk, but a trade with a very tight stop loss because of this bottom here, that could have made sense, a reversal trade right there. Right now, I don't think so because it's kind of halfway. It could make that small dash up, but it could make one more fall here. I don't see any advantage of trading it here up or down at this moment. If there is some good candles showing maybe bearishness, I would even consider shorts maybe tomorrow. But there's a lot of pound news coming up too this week. Take a look at the calendar. You can find that as well with analytics at markets.com, analytics forex calendar. And I'm not sure if it was tomorrow. Let's take a very quick look here. Or is it Thursday? Thursday. Interest rates, meeting minutes. So, but generally speaking, some news on the pound. So I would not like to trade it here. I did like to trade here. I can imagine why people were trading a reversal here. I'm not a big reversal trader. But from a wave perspective, that makes sense. 5 waves down, so we could expect an ABC. So there was a good chance that this was a B, and it was a very small risk plus relatively big reward potential. Compensates the kind of risk that goes along with reversal trades. I didn't take that one, but I can imagine if traders did that. Now, whether this wave C is completed or not, I'm not sure, and I think it's not a good spot to trade. Gold, yeah, let's take a look at that right now, no problem. Then we'll take a look at the Aussie, I think, after that. So gold, yeah, basically discussed that last week that there was a good chance, I think, that this would turn into an ABC, that this was going to bounce and not break the top and expand its correction. So far, that has, well, we at least have seen a turn. How far this turn will go is unsure, but the turn is there, and there is a double top. So those things have happened. That is clear, past already. Past this, that's already history. So what next? I think that let's take a look. I know this is a high time frame, but let's take a look at the monthly chart quickly. Excuse me, I am bullish for the moment, considering this weekly chart 5 waves, and hence I think that this is a correction. But I'm not sure if this is the correction finished, or if this is the new uptrend, or if this is still all part of a correction, and price might make one more fall down to the -1/8 here, for instance, and then bounce. or will it be upside? Is this the beginning of the upside? I think we can put a trend line like this. A sustainable break above that level would indicate a potential breakout. So far, last week, we've had a pretty sturdy bearish candle at that trend line and at the top. So looking at the last week's weekly candle, one would say that this is looking more like a bounce, a bearish bounce at resistance, rather than a breakout. So from that perspective, looking more, for the intermediate future, looking more bearish. This structure still is valid despite the fact that there is a bearish bounce here. Those things can coexist and they do not interfere with each other nor invalidate each other. We could have a bearish bounce here, price move back down to test this bottom or even this overshoot level and bounce, and this bullish structure would still be valid and have importance. So those things are not contradictory, but the only question is how far will it bounce? We've had a weekly candle, but that does not everything. And how far, if it bounces, how far? So let's zoom into the daily chart now. So far, let's take a look at that upside, because I said that this bounce, I'm not sure if that's start of an uptrend or still part of the correction. One thing we can look is try to decompose this and try to understand, is this an impulsive wave? Are there 5 waves? That helps with understanding whether this is the start of an uptrend or not. I have been leaning towards yes, and of course, nothing is certain at this spot, I think. But I'm leaning towards yes. I do think there's a good chance that this is a 5-wave up, and hence we can expect a 3-wave down. And therefore, I think that the downside potential might be limited. But if we put a fib on the very bottom to the very top, we did have a 50 retracement. And so far, these tops have been equal to each other. So it could be that price hits the 61.8 fib, the 50, maybe even the 38.2 fib again, and it makes kind of a sideways flat like this. So 1230, 1210, 1190, those could be bouncing spots. Angel's mentioning 1173. I'm not sure, what do you mean with Bay, B-A-Y? I'm not sure what that means. But 1170 is possible, but then price would have to make a deeper correction to about this fib. Do you think the 1173 is the level for Bay? Not. Oh, buy, of course. Sorry. I should have known. No, it's, I don't know why I didn't see that. I was blind for a moment. Yeah, buy. Yeah, I think that could make sense. I would personally wait for confirmations of any of these fibs. Although I think there's a good chance of 5 waves. The reason why I'm a bit hesitant is this wave 1 and wave 2. It is not a very clear wave 1, 2. So I think there is a good chance that this is a wave 1, 2, but the lack of a clear wave 1, 2 means that there's also potential for A, B, C. So I am not as certain on this as other scenarios. All right, so therefore I would rather go with candlestick confirmations in these fibs. So let's take a look at that. Anyhow, let's zoom in again for our chart, because for the moment, considering the bounce, I think there's a good chance, a fair chance that price will get to these fibs. That means that there's space to those fibs, at least to the 38.2, which is the first bouncing potential spot, I think. So unless price breaks above this top, right, there's a better chance that price will get down to at least the 38, if not deeper. Hence, that if price makes an upside here, there is a good chance, I think, of a bounce back to this fib. So from this perspective, also considering the fact that. Let's take a look. No, scratch that. But I can look at the 1 hour chart. 1 hour chart, not a clear momentum so far. But one could say that this is an A. So I would like to see a wave B, A, B, and then down for C. So I would like to, trading gold, it looks like trading the B wave might make sense. So I'll put a fib from here to here. And I think anywhere around here could be interesting reversals for downside. 50, 61, 78, 88.6 fib, but not breaking this top. So something like this. Now, do I know that price will stop here and, is this the end of A and the start of B? Do I know that for sure? No. I'm just speculating that if price stops here and starts the retracement for B, and once price gets up to resistance, I think there's an interesting chance to trade the B for C. Whether this is a bouncing spot or not is not 100% clear. There is a moving average, long-term moving average, which does add to a potential for a bounce. So that could be one reason. There is support levels on the left here and tops. So those are things to reckon with. But price might still make a little bit downside to reach the 23.6 fib. For the moment, for me to trade upside as a completion of wave A and to trade that small bounce for wave B, I would at least need to see engulfing twins on the 4-hour chart at the very minimum. And probably the short-term average to be up like this. And then might even zoom into a lower time frame to try to trade this reversal back up and then try to trade the reversal back down like this. But it's not ready in this case at this moment. Angel saying 1275 is pivot level of Camarilla weekly. 1275. So that would be confluence with the 50, I would say, pretty close to the 50, in between the 38 and 50, but the 50 here and the trend line. So thanks for that info. So that could be some confluence there. We can add the Admiral pivot points. Or let me use very quickly the other template that I use most often. And what do we have here? Weekly pivot point at 1275. Look at that. What a confluence. So that's something to reckon with. Also at the top of the Keltner, the Admiral Keltner as well. So that's indicator, yes, that's indicator. Wait, it's not visible now. 1 second. That is Murray math. This one, right? Yes, that's Murray math. All right. So let's take a look at, yeah, those are my thoughts on gold basically, or my plan on that. So Aussie is bullish at this moment. Look at the 4-hour chart, and we can see prices above the 3rd Fibonacci sequence level. So I think there is a good chance for price to get up to the 4th. Basically, I attempted yesterday the Aussie actually here, but got out of it for just a few minus pips as it was struggling too long here, from my view, and I was going to bed after that as well. So, but didn't go anywhere really. Actually, it looks like a range for the moment. But I think that there is a potential for the Aussie to make an upside. This range ultimately could just be a setup for that last push-up, or not last, but one more push-up. We got some strong support levels on the left here as well. Just thinking what kind of trigger I would like to see. Probably I would need to see a break above the 21 EMA, and I would like to see a hook back to it. Because price is going below it again, so I want to see momentum there. So I would like to take it there. So that's my plan on the Aussie. Alrighty, let's see. Kiwi looking bullish so far. And that could be good because it is breaking above the 21 EMA. It's hooking back to it. So could be a good continuation. I would probably still need one, at least, yeah, this, I'm not sure about this. It is an uptrend, but it has been going pretty flat for a while, so I would probably need to see a new hook back to the 21 EMA, or at least the short-term moving average turn bullish. This is bearish. When the short-term moving average is bearish, that is something to not take the trade. So I need this to at least turn up again. But I think that in any case, the Euro New Zealand or Pound New Zealand could be maybe more interesting. So let's take a look at that. So this is a clear downtrend on the Euro New Zealand on the 4-hour chart. On the hourly chart, we've passed 1, 2, 3, 4, fifth level, getting into a sweet zone between 4 and 5 and 5 and 6 on the Euro New Zealand. So I think that this one is better actually, personally. And it looks like that everything is pretty much set up. The 4-hour chart is in a downtrend. The hourly chart has red indicating downtrend as well. And we see price trying to break below the moving average. So the only thing I need to see, in my view, is the short-term moving average to turn bearish. So I need this to turn like this, and I think it could be set up for short as a continuation down to the 6th level. That might take some time, but I think ultimately, although choppily, it might reach that level. So that's an interesting zone right there. Almost everything is finished, but I need to see this short-term moving average kind of click this way. So from a price action point of view, probably that would mean to see even a small bearish candle like this. Let's take a look at 50-minute chart. Small little candle means probably a small push on the 50-minute chart. Small retracement back to this level probably could be okay, and then a bounce, something like this, for instance. Stop loss, I would go above this top. All right, so pretty much set up, but just a tad more confirmation, just a push, pull back, and continue, because if this would have clicked down, if this candle would have been a bit bigger, probably something like this, then the short-term moving average would have been down, and that would have been enough for me. But the short-term average is a very important filter for me. And if it's not with, if the short-term average momentum is not with the trend or with the trade, I skip it. I need to see my multiple time frame indicator plus this aligned. Otherwise, the odds are not stacked not stacked sufficiently in my favor. All right, dollar CAD. Mary's asking for that, and we can take a look right now. So what do we have here? We have pretty much price making a weak channel like this, and oh no, wait, I dragged a line by accident. Hang on. Good momentum to the downside, that's for sure. And a good break of this trend line. Good break of the support levels. So if that's the case, we could see, basically, we see a momentum here. Ultimately, we see a correction here. So could we get this? And it's possible. It's possible that the dollar CAD could make an ABC correction on the weekly chart like that. On the monthly chart, that could just mean a correction still like this, and then upside after that, because this momentum is still pretty powerful. Let's see. For the moment, this could be the start of a bigger downside. The 4-hour chart, in any case, is trending down. That's clear. So what I would be looking for is opportunities to trade that momentum, that trend on the hourly chart. So far at this moment, I don't see any opportunities on the hourly chart. We do have the downtrend. Look at the short-term moving average and the multiple time frame indicator. Everything is red, but no opportunity. So an opportunity would have been this candle, for instance. This was a strong breakout candle and a good alignment there. So entry right there, stop loss above it. That trade is still going on. At this moment, I would need to price this to make a retracement back to the 21 EMA and then turn at the 21 EMA and try to trade the turn for further downside. That would seem interesting on the dollar CAD. I'm just adding targets, fib targets here. Past the third level. So this third level now becomes resistance, potential resistance, and price would then have the potential to go to the fourth or maybe even the fifth level. But I'm not sure. It might just make the dash to the fourth level right away, then hook back and bounce back to the third before falling. Sorry, the fourth. I'm miscounting. Sorry. Excuse me. This is actually the fourth. So I'm not sure. It could fall right away to the fifth. Let's see. If it does pull back to the fourth, then there's a good chance down to the fifth. On a 15-minute chart, it is still too close to the fifth in my view. So it's not a good moment here. I think if it does hook back to this level, I would think about shorting it. It would have been different if price, let's see. Here, for instance, a bear flag, momentum before it. So these two candles, that could have been breakout candles, right? Because we had a break of the fourth level here. So those are a bit different maybe at that moment. Now it's too close to the fifth level. Same thing here, a break of this level, too close to the fourth level. So I would need to see a hook back. If it does reach the fifth level, I'm not sure, then that's a pretty big target already. So it might make a bigger correction. So I'm still interested in shorting at the 21 EMA, but be aware that it could expand into an ABC. So let's see, if it makes a bounce, I would be interested in that. Pound yen was a good short yesterday too, same as the pound dollar, same setup. Fourth level break down to the fifth. Now it's making a reversal. If it does show a turnaround here, I would be interested in shorting it because it's in a downtrend on the 4-hour chart. So I would be interested in shorting it here if there's a turn. But I'm not sure if that turn is going to happen, so I'll have to wait for that. If it doesn't happen, if there's no turn, I would not short it. If there is a turn, I will short it. How I trade the turn is basically I wait for confluence with the short term, the indicator, and I wait for trigger on my entry chart to, like this, for instance, right there, for an entry to the downside. So I'm not sure if we get that. Let's see. It's pushing pretty hard to the upside. But the pound yen, one more push down on the pound yen, I wouldn't mind personally to trade either. I'm not sure if it's going to happen. Time will tell. I'm just checking if there's divergence. That, of course, gives us some info if a downtrend will occur or not. Let's see. I'm not sure which one what will happen, but I will wait. I will keep an eye on this and wait for a turn. If there's a turn, I would be interested, unless it hits the long-term moving average. If it hits that, then basically I will not be interested anymore, because in that case, the correction is too strong. In that case, price has really made a strong pullback, and I'm looking for trending scenarios. This would not be a downtrend anymore in my view on the hourly chart. So same with the pound odd. Same for the pound New Zealand too, in fact. They're all pretty much the same. So let's see, let me check yen, Aussie, and New Zealand. Here in New Zealand is pushing slightly lower. That's what I need to see. Here it is, New Zealand right here. On New Zealand, pretty much in a downtrend, very clearly. So we're getting a break like this. I think there's now a pullback occurring. So if price gets into this zone and then turns, there would be a 4-hour downtrend and a pullback on the hourly chart. So that looks like more Aussie weakness and more New Zealand strength, or both, or one of the two. So from that perspective, if I would have to choose between pound odd, pound New Zealand, I would choose pound odd because, more New Zealand strength. Sorry, pound New Zealand, excuse me, I got it mixed up the other way around. Because, no, wait, now I'm getting confused, sorry. If I'm expecting Aussie weakness, and I'm expecting pound weakness as well, then pound New Zealand is better indeed, because the New Zealand is slightly stronger. So that means the pound New Zealand should fall more. Yes. Alrighty. So sum it up, to summarize, pound New Zealand looks probably the most interesting at this moment from the pound pairs. Yep, I think so. Pound New Zealand probably definitely better than pound odd, probably better than the pound yen at this moment. Dollar CAD looks interesting indeed. If it makes that pullback, Euro New Zealand could be interesting for continuation. The pound USD maybe, but those are already 4 pound pairs we just looked at. So still, I think pound New Zealand probably the strongest, because New Zealand dollar is an uptrend. So pound New Zealand looking the best of that. Dollar CAD, Euro New Zealand, maybe Aussie. Those probably look the best to me. Alrighty. Well, that's my view on the market for the moment. For more webinars, feel free to sign up right here with Education Forex and CFD webinars. And there you go. And then it's live trading session. Tomorrow we take a look at candlestick and Fibonacci patterns. And then Thursday we take a look at effective timing and time patterns. So I hope to see you in one of these. Of course, don't forget to check out all of those good things I mentioned at the beginning as well, which you can find out or find at admiralmarkets.com, and you can discover a lot of things here: education, programs, articles, webinars, analytics, platforms, extra products like volatility protection settings, and of course, not last but not least, the option to start trading demo or with real accounts. So that's something you can check out and find more info about. There's basically a lot of analysis and information and stats and graphs to support your trading. So I think it's a good place to start here and make admiralmarkets.com your trading hub in a way. So I hope that you do that. I'm looking forward to see you tomorrow or Thursday, and wish you all great trading. Cheers, folks.